FamilyOfficeRealEstate.com podcast with your host, DJ Van Kuren. He's from the Arsenal Family Office. Each podcast is about real estate-related topics specifically for family offices. Now your host, DJ Van Kuren.
Thank you for tuning in for another episode of FamilyOfficeRealEstate.com. Today we have Mike Consol, who's the editor with Real Assets Advisor. Mike, we'd like to welcome you to the podcast.
Glad to be here. Thanks, DJ.
Fantastic. Well, Mike, as you know, we've had a chance to initially meet at a family office conference, and we've chatted a few times. And, you know, one of the things that I've noticed over the last year plus is that all these various family office conferences, I see that you've got your magazines that are available there, and I've had a chance to go through the magazines and also your website, and it's a great resource in general, but specifically for family offices. But Mike, could you tell me a little bit more about your publication and the website and what's all involved in the information that you have?
Sure. First of all, just by way of a little bit of background, we're published by Institutional Real Estate Incorporated, and that we're the latest of 9 different titles, magazines that are publications that the company puts out. But we are the first retail publication, the first for the individual investor. All the others have been for institutional investors. And our founder and CEO realized that the market didn't have a publication, a magazine that was devoted to real assets. And what we've been seeing is that a lot of the RIAs, or registered investment advisory firms, are starting to move towards the endowment model of investing, where they're getting away from the two-dimensional stock and bond portfolios and starting to diversify into alternatives. And but there's an awful lot of them that still are stuck on the two-dimensional portfolio model. The purpose of our magazine, which goes to chief investment officers and wealth advisors at the RIAs, the folks who deal with high net worth and ultra high net worth individuals and families. The idea is to really kind of promote the endowment model, or the integration of real assets into portfolios, because we believe that the two-dimensional stock and bond model is outmoded. It's just not in keeping with the current state of affairs economically, where we have a lot more volatility. Interest rates and inflation are quite unpredictable, or even deflation, the threat of deflation. And therefore, there are certain assets that should be in a portfolio that need to be a hedge against that. So our purpose is to really educate and promote that model of investing. And I will say that I mentioned alternatives. People are moving into the alternative space in some significant numbers. So we're a subset of alternatives. We are real assets, meaning hard assets, tangible assets that you can actually touch and see. So that's kind of in a nutshell, the idea behind the magazine.
Well, I'll tell you, Mike, we really haven't talked before about that and the endowment model, et cetera. But I have to tell you is that I agree with you 1,000%, and one of the reasons is I just wrote an article actually about family offices and replicating the endowment model, which I just finished up over the last week or so. And, you know, it's interesting because you have the retail channel, which I would consider your mom and pop type standard investor, right? At the other end of the spectrum, you have the institutional investor, whether it's the insurance company or the large investors, right? And then in the middle, you've got that RIA, which is typically a step up from that retail model, and then you've got the family office. And when you look at the family office space, the biggest thing that I say is that it's sort of like a hybrid of the two, right? You've got the sophistication on some levels, although a lot of families, made their money in one specific industry, and so that's what they know the best. But then again, they've got a lot more capital in order to, do an asset allocation. So what I typically say is that, instead of someone buying a mutual fund, or a stock, somebody in a family office would end up buying that company directly. And so what you can do when you have a lot more money, and, the endowment model is something that's has been proven. You look on historical returns from whether it's Harvard or Yale, and they've had significant advantages and returns to their portfolio. And in fact, a couple years back, one of the topics had to do on the real asset side, which was with real estate, which had been a pretty good portion of Harvard's endowment from an allocation perspective, but their returns were like 35%, and it really trued up the portfolio, et cetera. So in relation to real estate, what are some of the articles that you've seen or the information with real asset advisors, that you've noticed over the last 6 months to the year, and has that changed or increased over that time frame?
Well, I would point to a few things. One is the capital flows from overseas have been amazing. The United States has just been a magnet for real estate money from Asia in particular, but also from the Middle East, and I think to a lesser extent Europe and South America. It's such a stable environment here in the United States. Our real estate community is very transparent. The rule of law, the legal system is very strong, and people feel protected here. And they feel it's a place that where their money and their investment is safe, and they know exactly what they're getting into because of transparency and because of the type of laws and the legal recourse people have in this country. So there has been that. In terms of property types that have been really strong for years now running, there have been two in particular that really stood out. One has been apartments or just multifamily housing. It has been strong for years, and even now there are people who are saying that it's got several years left, that the thread has not run out. Well, there are others who are saying, the run is just about over. There's a lot of new construction in apartments, and it's going to be a big new supply coming online. That pent-up demand that people have been talking about for apartments has been millennials living with their parents, not necessarily because they don't have a job. There was a period of time when that was going on, but employment's much better now. A lot of them have chosen to live with their parents for a while, put themselves in a good financial position, maybe pay off some of the college debt they may be carrying, and then they're going to be moving out of their parents' homes into an apartment. It works that way, where it's an apartment first, and then eventually someday they'll be home buyers. Millennials aren't that key on buying homes, frankly. That's another dynamic at work here. They tend to be a little bit more mobile, a little bit more on the move. Apartment living, kind of the lock and rock apartments where you can just kind of walk away from it. There's no yard to worry about. Everything's kind of self-contained, is very appealing to them. So there is the argument that the apartment rally is going to continue, while others say, there's so much building going on that I don't trust it anymore. And some of them are starting to liquidate those assets. The other category that is very strong and is expected to be strong into the future, I don't hear anybody saying, hey, this one is just about run its course and is going to see a correction, and that is warehouses. Warehousing has been tremendous, and it's very largely because of e-commerce and distribution systems where they are trying to get closer and closer to market. As I think we all know, Amazon is really into the same-day delivery thing, and all people, all organizations, all supply lines are now thinking in terms of being very quick to their destination, because that's one of the advantages to that you can offer a shopper that says you don't need to run to the store to get it. We can get it there the same day. Later today there'll be a knock on the door and your package will be handed off to you. That's a big advantage. Well, that takes tremendous warehouse space. It takes tremendous logistics. So warehouses are being built in a big way, and they're becoming quite technological. They're becoming roboticized and automated, fewer human beings to run them. So the feeling is that warehouse is going to have a good long run here. I think it's just 10% of all retail sales. The most recent figure I heard was 10% is bought online, which means there's still a huge upside potential, because I think most people do believe that that percentage is going to rise, and more people are going to do shopping online, especially since not only the quick delivery, but online retailers are very big about, look, you can order 3 pairs of shoes in 3 different sizes, figure out which one fits you, send the other 2 back, no charge. So they make it very simple, and they take the intimidation out of the idea that I'm going to buy, a blazer, I'm going to put it on, I'm not going to like the way it fits, and then what? They make it simple to turn it right around, and it's not punitive at all. So warehouse, another big one.
And when you say warehouse, you're lumping that in with industrial, right, as well?
Industrial, warehouse, so everything from manufacturing, urban gardening, and indoor gardening, pot growing in Colorado. The price of warehouses shot up in Colorado because old warehouses were being moved into because the law requires marijuana be grown indoors, and other states are doing the same thing, which means a warehouse space, and it doesn't have to be modern warehouse space. Some of the stuff that you thought was outmoded could now end up being a place where you have some growers coming in saying, we'd like to rent this.
That's interesting. I've been contacted about, and there's been some firms that have actually tried to have a focus and starting to look at strictly doing cannabis-related, real estate properties, which is primarily on the industrial side and warehouse side, like you're saying. Everything that you're talking about. There's actually a recent. Some recent data that came out and in relation to high net worth and one of the sectors going into 2017, and multifamily is still at the top of the list, and second is industrial, which falls in line with exactly what you're saying. And it's interesting, and there's 2 things. One is we were having a conversation here in our office with my patriarch and a potential investor, and he was telling us about a friend of his that has a warehouse here, 30,000 square feet. And they've got 30 employees. And I'm thinking to myself, okay, 30,000 square feet with 30 employees, I'm like, there's a disproportion here, right? Well, the reason why was because they have robots, which is something that you brought up, right, from an automation perspective. And what this guy said, he goes, that's not even the amazing part. The amazing part is that when this friend of his went to look at these robots, there were robots making robots. and,
exactly.
That sort of puts things in perspective. And also, a colleague of mine here, we were talking the other day, and if you go online, there's a YouTube that talks about Amazon, and they did their first drone. And they had a couple people in the UK trying this, and the guy put his order in, and I think within like 10 minutes, the package was delivered at his house. I mean, it was
extraordinary.
It is extraordinary. It is extraordinary, and we are continuing to move in those directions. However, there are retail locations. A lot of people get worried about retail, I think, from an investment perspective. But let's remember that. If you want to go out and eat, you've got to go to a restaurant. If you want to go work out, you're going to go to a gym, right? And so there are, if you're going to get certain services, right, you can get your nails done or your hair cut, you can't order that online. So
Precisely.
There's definitely still a need for the retail. It's just a matter of what type of retail and who are the tenants going to be. But I think you bring up a big point about the industrial and multifamily. Just to touch on that really quickly, I mean, we're sellers of multifamily, and we see a downturn that's going to be coming in probably around 2019, 2020, and so we plan to do a lot of purchasing of multifamily at that time. But another area is the senior multifamily space. I think that it's been overlooked because there has been a lot of market rate apartments that have been being built, and a lot of people have focused on the millennials. But I think that's another area that's going to be big here in the future. So
I agree. It's highly regulated and whatnot, so there are some risks to it, but the need is going to be tremendous, and it's going to run for decades.
Yeah,
and I want to point one other thing out just on the manufacturing front real quickly. New York Times just had an article, and I just pulled an excerpt from it. It said in 2016, the United States hit a manufacturing record, producing more goods than ever. But you don't hear much gloating about it because manufacturers made all this stuff without a lot of people. Thanks to automation, we now make 85% more goods than we did in 1987 with only two-thirds the number of people, of workers. So the amount of workers has dropped by a third since 1987, but our productivity, the amount of that we manufacture has escalated by 85%. So right there you see, in line with what you were talking about, and I had mentioned earlier about the automation and the technology, the robots, it's more and more where the productivity is getting outstanding. But at the same time, it's not creating a lot of jobs, and that's one of the big worries that people have.
That is a whole topic in itself because, we were talking about even not only for robots, but you look at these self-driving cars, which some say it'll be perfected in the next 5 to 10 years. Well, if that starts to really happen, you're not going to need parking garages, right? Because these automated cars can go out and they can park 30 miles outside the city. So now you've also got parking garages that might be able to be reused, et cetera, but you're taking jobs away from potential truck drivers, from taxi drivers, from Uber drivers, which goes back to the unemployment.
Truckers.
Component of it, right? Yeah, so that's
I believe the figure is 20 million. I think it's like 20 million jobs, DJ, altogether in the United States that people who make their living driving.
I mean, that's what? That's about 7%, 8% of the population. I mean, that's
huge.
And I think a lot of people, hear about that or they sort of bypass it, but if people aren't getting retraining and new opportunities aren't being created or people are ready for those opportunities, there's a lot of could be a lot of issues that are coming up for sure. Mike, we're going to take a quick break, and then we're going to come back. I know that there's a couple things that you're working on at the magazine I'd love to talk to you about in relation to the family office space, and then maybe we can tap back in a little bit more about the publication. So we'll be back in a minute, and after this message.
Hi, this is Jim Freed, the host of Freed on Business on 880 AM The Biz in Miami, and you're listening to the U.S. Family Office Realestate.com podcast. The podcast provides you real estate information designed specifically for family offices. Make sure you check out USFamilyOfficeRealestate.com for educational information for family offices, including white papers, fact sheets, videos, and podcasts. You'll also find information on specific markets and assets, real estate cycles, tax-efficient real estate investing ideas, and much, much more. That's USFamilyOfficeRealestate.com. Information for family offices by a family office.
So we're back with FamilyOfficeRealestate.com. Today we have the editor of Real Assets Advisor, Mike Consol. We've been talking about their publication, which is definitely, they've got a lot of resources, not only with their hard copies, but also online for family offices, not only in relation to real estate, but real assets as a whole. So, Mike, we had a chance to chat a little bit. I know that there's an initiative that you're exploring, with possibility with family offices. Why don't you tell our listeners a little bit about, what you're looking to accomplish and, what's some of the information that you're trying to put together. I know it's still in the development phase, but I think it's pretty interesting what you've been talking about. Could you share that with us a little bit?
Sure. We have been, of course, covering multifamily offices and family offices, but I wanted to I would like to put something in the magazine that is a monthly feature. I neglected to mention earlier that our magazine is a monthly magazine, and then, of course, we have a website with daily news feeds and whatnot. So the idea would be to have a family office feature where each month we spotlight a different family office, and in a 1 to 2 page feature, just very condensed, looking at the family, how it made its wealth, the primary source of that wealth, the portfolio, just in terms of asset classes by percentage. I love the idea of a pie chart that basically kind of parses out what percentages are being put into what particular asset classes. The chief investment officer, the administrator in charge of the family office, and assorted other information, future plans, perhaps where their investment portfolio is trending. Now, this gets into some information, though, that the jury is still out as far as I'm concerned on whether family offices, single-family offices, would share that information, at least in a meaningful enough way that a person who reads that feature can come away in feeling like they're starting to learn a little bit more about how family offices operate. Purpose being, of course, that the more exposure people have to the different investment models or different choices being made by professional investment people, the more informed they are. So that's what we would like to do, and it's still exploring that. And DJ, you're one of the people I came to kind of help me in terms of doping out what the contents of that page might be and what's realistic and what's not.
Yeah, well, I think the information itself, like you're talking about and what you're thinking, could be extremely valuable for families. I agree with you 100%. And the saying that we've said before and that you've heard is, when you meet one family office, you meet one family office. But, one of the biggest things that I have come to realize, and this was when I started into the family office space, is you have these brilliant people that have been very successful, but it's really been in one specific industry. You ask them about widgets, and they're going to tell you everything you need to know. You start asking them or talking about, various real assets, asset allocation, et cetera, and their eyes glaze over. And, in fact, there's a story that I continue to tell. There's a family and the patriarch I met back in the back east, in the southeast, that, he gave me his card, and he had to have been worth $300-400 million if I'm guessing, and his card had his name, and underneath it said investor in training. And I thought that was the best, and a lot of having to do with allocation and where to put your money and how to put your money. I mean, it's an area that is definitely needed from families, and sometimes they will work with advisors, like you had mentioned, either RIAs, or they'll hire a CIO, or maybe they'll outsource it to a multifamily office for their CIO. And then there's a lot of them that just wants to take the bull by the horns and do it themselves. But it is an education process, like you mentioned, and everything else. Mike, tell me a little bit about, a couple things on your website that I really like had to do with your videos and your podcast. Can you tell me a little bit about those, and if there's a specific focus that you usually have or what you try to accomplish with those? Because I think that's, if you don't have time to read, it's always great to either listen to or whatnot. So can you give me a little insight on that?
Sure. I'll start with the podcast, which I personally handle for the company. And there's a couple different things that we do there, DJ. One is that oftentimes the cover profile, I record the interviews with the CEO of the particular RIA, and then clean that up a little bit, run it past them, get their permission for us to use it as an Inside the Edition podcast. So basically you're listening in on my interview with that CEO. I take out anything that's sensitive information that they feel that they don't want included. Then we also have an author spotlight where we take an author who's written a book about something that's relevant to real assets, to the individual investor, and so on. Then we have something called Shop Talk, where we talk about various topics that are important within that category. So, for instance, it could be talking about the illiquidity premium. It could be, the advantages to private equity real estate versus listed real estate. We had one recently when we were just talking about apartments. We had a guy who gave a very convincing talk with me about micro unit versus family unit apartments and how there's a great need for affordable family unit apartments and the advantages to that versus everybody's micro unit crazy. And he's saying, the 3 or 4 room apartments, they fill up and you have a more stable renter and so on and so forth. So the podcasts, the nice thing about podcasts, like you were saying, DJ, so a lot of times people don't have time to read, but they have a commute. And podcasting you can listen to while you're working out at the gym, while you're commuting, laying in bed at night, you name it, which is why we give ourselves a lecture stretching out to maybe 30 or 45 minutes on them. By contrast, then we do these videos, and the videos are dealing with various topics as well that are relevant, and they tend to, of course, be shorter because you could always treat a video as a podcast really without looking at the video because basically what you have is a talking head. But we have some recent videos on things like conservation easements. So a person who's got real estate holdings could look at a major tax advantage through a conservation easement. We talked about the reality versus the myth of life insurance, the secondary market for life insurance. Richard Kleinman on U.S. markets and how they're performing right now. We have one from Jeff Conrad on the agriculture industry. So we try to get around the different asset classes. And our 4 major categories, which I didn't mention, of course, is real estate, infrastructure, energy, and commodities.
That's great. I mean, I want to note some other things, too, about some of the articles that you guys currently have, which are just fantastic. You've got some articles on the infrastructure in the Trump area, some information talking about REITs, energy commodity prices, like you said, solar, what markets to watch, some emerging trends in the U.S. and Canada for this year, but also international. You've got topics in regards to Argentina, India, Cuba, and as you continue to go through, I mean, there's, I keep looking at these various articles. I'm like, I want to read that. Oh, that looks good. Oh. So, legacy wealth and real estate. I mean, there's a great one right there, right, for family offices and their future plans and everything else. I mean, it's definitely one of the things that the reason why we started this family office real estate website was to be an education source and to provide information to families in regards to real estate. And I've got to tell you is that I could probably put a link on the front page directly to you guys because you've got a lot of topics which are absolutely fantastic. So, Mike, if people want to either get a magazine or they want to find out more and be able to access your information online or even get in touch with you, how can they do that?
Well, our URL, to begin with, you can Google Real Assets Advisor. And by the way, advisor, we spell ER at the end, not OR. More and more people are using the OR, but it's Real Assets Advisor with an ER at the end of advisor. And the easiest way to do it might just be to Google the name, but because the URL is a little bit more complicated than that, it's www.IREI, which is institutionalrealestateincorporated.com, and it's /real-assets-advisor. That's why I tell people, you can go ahead and just Google it. However, I will say this. You can just type Real Assets Advisor, all as one word, .com, and it will actually take you to the URL I just recited. So realassets-advisor.com, it'll get you there. And it will give you an opportunity to sign up for the free news feeds, to subscribe to the magazine. Our magazine is basically free, and it comes in several different channels. If you're a qualified investor, the magazine is free to you. And the idea is that you can receive it in print, mailed to you. We also have a flipbook edition, which is an exact electronic replica of the magazine. So it's easier to take on the go if you don't want to mess with paper. And then, of course, the articles, not everything, but most of the articles and columns appear on the website as well. And we have a very good archive as well to past stories, so people can search things out by an area of interest.
Well, Mike, I want to thank you so much for being on the podcast today. This is an interview that I think a lot of our listeners will be excited to hear and allow them to have access to another source that can be great from an education perspective. Today our guest was Mike Consol. He's the editor of Real Assets Advisors, which is a part of institutional real estate. And Mike, we really thank you for the information and giving us an update not only on your site and what it entails, but also some of the information in regards to real estate and what you guys have been seeing.
I enjoyed it, DJ. Thanks for having me.
All right. Well, thank you so much. Today, once again, was Mike Consol, the editor of Real Assets Advisor. Be sure to check out the website. You can type in Real Asset Advisors. It'll come up. You can Google it. It's a source that you definitely want to check out, you want to go to, because there is a great amount of information. This has been DJ Van Kuren, the Arsenal Family Office for USFamilyOfficeRealEstate.com. We appreciate you listening, and be sure to check out our website for more educational information as well.